Gareth Solly from Black Cat Syndicate. This is a company that has a very high-powered team behind it. The guys who are involved in Silver Lake Resources, Paul Chapman, Les Davis and Gareth himself, these guys have been there and done it all before. This company has a substantial resource near Kalgoorlie at its Kalgoorlie East project, and it's planning to construct a central processing facility. To tell us all about it, could you please welcome Gareth Solly?
Excellent. Good afternoon now. It's getting close to lunch, so I'll try and wrap this up pretty quick. We've got a lot to go through. Good to be here in front of people that are interested in investing in gold, because we're a pure gold play, so no lithium chat in this talk. So Black Cat's been around for about four and a half years now. Hopefully you've heard of us. If not, look us up and come and see us in the booth. Here's a bit of a summary up front. We've got 3 projects now. So we have our Cal East project, and we are looking to build a mill there at some point. We're not doing that right now. We have just bought 2 new projects from Northern Star Resources, and that gives us a combined resource of about 2 million ounces at about 2.5 grams per tonne. All of our projects are located in WA, so that makes it easy for us to manage. We're based in Perth. In terms of a pipeline of projects, we plan to have all of these into operation within a 5-year period, and that's the plan at this point, and I'll talk you through that. As introduced, we do have a strong board. I'll talk to those guys later, but yes, Silver Lake management, founding directors are there. We've also got a strong management team with operational experience, which is key when we're looking at moving into that space. We are well funded at the moment. I've got $20 million to play with drilling. That's going to go into Coyote, Paulsens and Cal East and look at the restart studies. So from the little chart, we think we're quite undervalued compared to the cash flow that we've already shown in our projects, in one of our projects, compared to the infrastructure value in our projects and compared to the potential that we'll talk to. So here's where we're located. 3 projects now. We've got number 1, Coyote, up in the Tanami. 2 is Paulsens in the Ashburton, just down the road from what Luke was talking about, Mount Olympus, and 3 at Kalgoorlie, the best place to be looking for gold in Australia for a number of years now. We've got a lot of infrastructure. The 2 new projects come with fully established mills. They need some work to get them running again, but it's all there. We don't have to build from scratch. There's 750,000 tonnes of installed capacity in the 2 sites. And that's something we're looking to leverage off and get moving on. We have the workings of our own 800,000 tonne per annum mill at Cal East, and we've already released a study that shows we've got reserves there. We've got cash flow after we've built a brand new 800,000 tonne per annum mill of another 106,000 ounces, and it's only $106 million, and it's only just starting. So, 5 years worth of feed and a whole heap of resource not considered. The directors have a lot of skin in the game, so about 12% of the stock, and they've put in about 7.4 million themselves. I'm going to talk to each of the projects and what we're doing on those sites. So Coyote was operated between 2007 and 2013, produced about 35,000 ounces per annum from open pits and underground with a head grade of around 5 grams. It's got a great land holding. This is a long strike of the bigger projects in the Tanami over the Northern Territory border, the likes of Cali deposit, etc. And it's a similar style to the Victorian goldfields as well, that slate belt style gold mineralisation. There's a lot of infrastructure here, 300,000 tonne per annum processing facility, camp that's used by all the other companies in the area. And there's 500,000 ounces at 5.1 grams per tonne. We've, in our DD process, done a scoping level study on this, and we'll keep working on that as we're drilling it later this year, and we'll get some numbers released. But certainly already we can see ourselves with a 5-year project, and that's only considering a very small part of the resource. So there's a lot of work to do, and we'll be getting the results of those studies out progressively over the next little while. Drilling starts here in July, so next month, and we'll be looking to prove up the open pits, the starting underground, and moving on to growing the resource. some of those targets that we'll be aiming for. The red on this image, the red shapes are our planned sort of scoping level open pits. There's a couple of years in Speedy, and then there's a couple of years in the Kavanagh below that. So a new decline going down, new development, 2.5 metre wide, average mining width, 7.5 gram head grade out of that underground, and that's not considering all the existing remnant material. So there'll be a lot of upside to come on top of this. There's also some bigger targets at depth, some dolerites which have the potential for a different style of mineralisation. Regionally, we've got a lot of geophysics currently underway. There's a lot of targets here. Again, you've got the big trans-tanamised structures that run through this area, and we've got the right stratigraphy, the right structure, and already a lot of drill hits, high-grade drill hits that need to be followed up. Paulsens, this is the project that defined and created Northern Star, took them from an explorer to a producer. It's a great asset, and we're very happy to be the owners of this going forward. Last produced in 2017, and it's been on care and maintenance since, and kept in a way that it looks like it could be just switched on. Obviously there'll be some capital that goes into it, but it does look like they didn't really want to shut this one down. 75,000 ounces pretty consistently produced from this particular asset. 7.3 gram head grade, 900,000 ounces produced, and we think there's a lot more in this still. Good infrastructure here, so a 450,000 tonne per annum mill, a lot of other infrastructure in the area, and a really good land holding for further exploration. So we're just up the road from Mount Olympus, that Luke was talking to. And it's the only, near operation gold facility in the Ashburton. So we're happy to be owners of that. And that's the same for Coyote. It's the only operation that is currently being built in that area. So here, there's remnant opportunity. There was a reserve here that Northern Star had. We are working on upgrading that and increasing that ourselves. But we're not here to do remnant mining. We want to find, the extension of Paulsens or a repeat of Paulsens. So our focus is on drilling for those targets. And we will start, and we will take that remnant ore at some point as well. In terms of how that looks, this is an image on the right here of the historic workings. So it was mined by Intrepid early on, and then it was offset through the middle. Northern Star picked it up, mined on, and then it's offset again at the bottom. So the opportunity is for us to come in and find where that offset potential is, and that's one of our key targets. So a full structural view at the moment, and then we'll be going in and targeting on where we think that might be. There's also some repeat targets. So the bottom left image here shows the 3D seismic survey that was completed by Northern Star. That showed that there's rock types. So the gabbro is the host. It's broken on a fault structure, and very hard for me to see that there. But where that break occurs is where the gold gets deposited. Below that Paulsens gabbro, there's more gabbros, so there's more potential, and they haven't been drill tested. So for us, that's another opportunity. If we can find a repeat of this system, even if it's half the size, it'll be a big game changer for Black Cat. And then thirdly, there's a lot of hits outside of resource models, outside of currently mined areas, that we need to go back and chase up those gabbro veins, a metre at 236 grams. That's all sitting there that we can go and start drilling on and working up. Regionally, there's a lot going on here as well. So the big faults that run down through Mount Olympus and all the way down to Karlawinda, you're looking for splays off those and hitting the right trap sites, dropping out the gold. We've got 3 or 4 other resources in our lease package, and there's a lot of potential. So there's a lot of high-grade rock chips, both base metal and gold potential. We'll be working on those over the next 6 to 12 months. And Cal East, so this is where we initiated and IPO'd 4 years ago. So we started with 80 square kilometres, now 800 square kilometres, and we've grown a resource from 0 to 1.3 million ounces. We've released our maiden feasibility study, and that shows there's a viable project here. And we have purchased mills. We've got permits in place and approvals in place. Now's not a great time to be building, so construction labour around Kalgoorlie is pretty hard to get. So for us and for the business, at the moment we've deferred this decision. We've got these other opportunities that we're working up, and we'll chase those down. This is the outcome of the feasibility study. So there's a 5.5 years production scenario here, produces 300,000 ounces of gold, so about 56,000 ounces per annum. And it has an all-in sustaining of about $1,500, which is, I think, is the average of what Rob was referring to this morning. Importantly here, we've only looked at about half the resource in our current resource base. So about 600,000 ounces have been assessed, and the rest of it is still to be reviewed in time. And we are still drilling here, so this is going to grow. We're currently doing grade control drilling at Myaree. Myaree has the potential to be cash flow positive for us next year, should there be a tolling option in one of the local mills. So for us, this is a key thing, is getting some cash flow into the business. And Myaree certainly is ready to be mined, so we're looking at that at the moment. That's where we sit against some other deposits on an all-in sustaining cost basis. So it's competitive, and once the timing is right for building this, we'll get stuck into it. So again, just hitting back to that key management, we've got Paul Chapman, Les Davis, founding directors of Silver Lake Resources, Tony Polglaze of Avanco, fame and fortune. We've got Philip Crutchfield, who is founding chairman of Zipco and a barrister over here on this east coast of Australia. And myself, I'm just a mine geologist, but I did run Daisy Milano for Les and Paul in the early days when it was a very successful mine. So I'll move on quickly through to the end, because I know we're running out of time and everyone's getting hungry. I can hear the stomachs grumbling out from here. The one thing we've been always done is be very active. So for every ounce we've acquired, we've added another 1.5 through drilling. It's activity driven. So from a junior, you have to be active, and I think we've shown that we can do that. We've now got 2 new projects to start off on, and they are going to grow quite rapidly in time. That activity looks like this for the next 6 months. So at the moment, we're drilling at Myaree. We'll be moving a rig onto Balagundi, which is a copper or a base metal and gold target. That's at Bulong. We'll be starting drilling at Coyote next month, as I said already. There's going to be a lot of news flow coming from Coyote, from Cal East, and from Paulsens. Paulsens drilling starts in September. We'll be working on our restart studies, and we'll start getting study information out to the market to show what we're going to do. The potential is to start the reprocessing of stockpiles next year after we've refurbed the mill. So come the last quarter of this year, we'll be working on that refurb, and we'll announce that to the market. And of course, there's resource work that'll be ongoing throughout the whole period. So just to sum up, we do have a 5-year vision to get into production. All 3 of our projects. It's going to be a staged approach, though. We're not going to launch and do all 3 at once. It could blow up any business. So at the moment, the plan is to restart Coyote, then Paulsens, and then with the cash flow coming out of those 2 projects, build the mill down at Cal East. We are going to be drilling high-grade and high-value targets. If we hit Paulsens repeat, Paulsens offset, or some really high-grade hits extending Coyote, I think that's going to be a game changer and significant news flow for Black Cat as a business. We are intending to have some cash flow coming into the business next year, so it's important. We've got 2 options: stockpiles at Coyote, so get the mill refurbed, start processing the 400,000 tonnes of ore that's sitting on stockpiles and get cash flow from that, or process Myri, so mine Myri, process it through a regional mill and get cash flow that way. Strong board and management, big resource base, and significantly undervalued. Like the previous companies, we're sort of sitting in the $30 per EV per resource ounce, and huge upside. We have a lot more cash flow in just Cal East at the moment, and it's still growing. We've got infrastructure value higher than that, and of course there's huge potential in these leases. So come and see us in the booth, and happy to chat more about gold. Thanks.
Thanks very much. Thanks very much, Gareth. Great story, and that is a team to keep an eye on. That company is definitely going places. So, look, thank you very much, everyone. That was a great session too. I didn't have to ring the bell once, and hopefully I'm in Kerry's good books because it's 12:30 and it's lunchtime. Lunch is served in the exhibition area and is brought to you by the team at Ollie Capital. So, thank you very much to our 5 presenters, to Barry, to Simon, Tim, Luke and Gareth. Some great presentations. Hope you enjoyed it. Please enjoy lunch.